Let's start with metals because they saw a big tumble yesterday.
Yes, and if you take a look at the CRB base metals index, this actually only goes through yesterday, but I wanted to bring this up because it's around its lowest level in 5 years, and we got global PMI data last night, and you saw China just inching out 50, which basically means it's barely expanding. But South Korea, for example, posted its second lowest reading since it was introduced in 2012. Australia, not that great. The idea is these are countries that are very metal intensive. They're growing quickly, especially China. So if there is a stumble in their manufacturing, is that a negative for their base metals? Kind of seeing that play out.
Yeah, we're seeing the China story drive so much of it. Let's also move on to crude oil very quickly here because oil overall has been moving lower. You can see there intraday down 4.4%. That's a pretty hefty
This
move.
is no joke, and this is the inventory numbers that we saw. We saw a lower decline earlier in the morning, but really picked up steam at around 10:30, and the reason why is we saw an inventory build. It was the first time in 9 weeks that we saw it build. Part of that is due to imports. We import about 10% more than the week before, but also you had the U.S. filling up a strategic petroleum reserve by 400,000 barrels a day. But it was a very big surprise for the markets. We were expecting a decrease, and we got a build. We also had another build in distillates, and I've been talking about this ad nauseum week on week. The more products you get, if there's no demand, that could feed back to the refiners, hurt their margins. They use less crude.
Is there a seasonal pattern here at work, too, in terms of there is a buildup or drawdown of inventory, during the summer months?
Well, no, there actually should be a drawdown because refineries are working more. They actually worked 1% more last week because of summer driving season, so we're using more product. So in theory, this would be the time where we would draw down those inventories and make room for production. So if we don't see that happen, how much more oil is out there? We got some staggering numbers from Iraq today that said they produced a record amount of oil last month in June. They were actually responsible for more than half of OPEC's increase last month, not just here, but the global issues.
And also there was an increase in production from OPEC, too, right?
Yes, so they increased, and that was really due to Iraq mostly. They're responsible for half of the total gain this month, and that was a surprise again. Produced about 4.38 million barrels a day. Million barrels total, I should say, excuse me.
I tend to forget that Iraq is considered part of OPEC.
Yeah, and
I just think that Saudi Arabia equals OPEC.
Understandable, but there's a lot more to that, obviously. And of course, the question is, if you do see oil prices decline, what kind of M&A may or may we not see? And I bring this up because Bloomberg Intelligence came up with a really interesting survey that said 2016 could actually be the time when we do see M&A if oil prices don't recover. Those leveraged companies could be looking for some help spinning off assets. And they named a couple big players like Exxon, Chevron, BP, for example, that have the cash that could go in and actually make a purchase. You know, Exxon has $35 billion, so they got some cash to spend, but they have not been interested as of yet.